Hey guys, Eddie back with Couch Talk. Welcome back to the show. If it's your first time with me, welcome to the show. Guys, please hit like, please hit subscribe, turn your notifications on. I need all the help I can get. It really helps me out with the algorithm. Today we're going to talk about the ridiculous state that our economy is in, and what has led us to this. But first, before we do that, I actually want to give a shout out to my very first sponsor on this channel. And I had a friend of mine, an old friend, a guy I've known for like 20, 30 years, back from my high school days, back from Greenwood, back from middle school. His name is Antoine Rochelle. He did a painting job for me in my bathroom in my room. And he did an absolutely phenomenal job. Just incredible work. Very precise, very detailed, very thorough, and good pricing. So I just wanted to give him a quick shout out. Let you guys know, if you need a painter in the Triangle area, he is your man. If anybody wants to use him, just hit me up and I'll give you the details. But anyway, let's talk about the economy, because it has gotten nuts out there. You've started to see banks start to collapse. It's the beginning of the end, folks. And my theory is that it's by design. My theory is that they're doing it like this on purpose, because the government wants a bank collapse. We'll talk about why here in just a second. Back in 2008, the market crashed, mostly due to a bunch of people borrowing to get houses that they really couldn't afford. And it wasn't necessarily, I mean, yeah, it was their fault, but it wasn't entirely their fault. They were enticed to do this. I remember when I got a house, I think I got a house a few years prior, but even a few years prior, they were already thrusting these incredible deals at me, right? Like, I remember when I got my house in Cary, I think I ended up paying $135,000 for it, which was a phenomenal deal. I can't tell you how lucky I got getting this house, the one that I'm sitting in right now, for $135,000, because it's easily triple that now. But even getting it for a good deal, you know, while I got it for $135,000, I'm sitting there like crunching numbers. I'm like, yeah, I think I can afford that. You know, I've got an assistant manager's gig. I can probably manage if I get a roommate, you know. And I was still crunching numbers. But meanwhile, they're like, oh, you can get way more than $130,000. You can get $200, you can get $300, you can get $400. They offered me a $500,000 house. And I'm like, I can't afford a $500,000 house. The payments on that are like $3,000 a month. They're like, no. Yeah, on paper it says you can. And I'm like, no, I can't. I promise you I can't. But there were so many that were taken unawares. There were so many where, you know, they go into a meeting like that. The person tells them that's what they can afford. And they're like, sure, I'd love more house, right? Wouldn't everyone? And so, of course, the market crashed. And not just due to that, but due to a variety of factors. But that was a huge one, was that everybody was overdrawn, right? Everybody was overextended. So here we see many of the same situations taking place. And back then, when the market crashed, the government did something that in my opinion, they probably shouldn't have done. They bailed a lot of the companies that were going under out. You know, they bailed out the big banking structures that had given out all of these loans when they shouldn't have. And they did it so that they could basically save the economy from itself, right? But the truth is, it isn't just that failed loaning practice that caused the economy to fail. It's a number of things. One of them is the Federal Reserve. One of them is the Fed, right? And now this is an unelected body that basically has regulatory power. They basically have the power at any point in time to change the interest rates. They have the power at any point in time to modify the amount of currency that's in play. This group of guys has incredible power, and we did not put them in office. They're basically just, the heads of the banks in the area, plus a couple of government representatives, but it's really just like appointed people, right? It's got nothing to do with us. And when we have basically every time in American history where there has been an unelected body that has power like this, that has the power to shape our lives, it's been a bad thing. Basically every time. In fact, we basically fought an entire Revolutionary War because we weren't getting the representation that we desired. So the Federal Reserve is a huge component to this. Now, one of the interesting things that happened as a consequence of the 2008 crash is something called quantitative easing, right? It was one of the things that they call an open market strategy. And I won't go into the details, partially because I don't understand all of the details, but also because you don't really need to know all of the details to understand what's going on here. But quantitative easing is a policy where central banks will, like the Federal Reserve, will buy products from other banking institutions or from the government, right? Usually they'll buy from other banking institutions, and then those banking institutions, those private banking institutions, will buy products from the government. And what that does is it continues to circulate money, and it tries to stimulate the economy and get it going again. And with our fractional reserve banking, which is another nightmare, in doing that, it basically multiplies the amount of money that's in circulation, and so it could theoretically kickstart the economy again. Now, I don't think that it works, and I also don't think that it was ever actually designed to work. We're going to talk about my conspiracy theory here in a minute, because right now, our banking system is collapsing, and I believe it is collapsing due to the very fail-safes that we tried to put in place from the last collapse. So if it is failing so utterly and completely because of those fail-safes, what other conclusion can we draw other than they did it on purpose because they want to see the banking system collapse? Now, you may ask yourself why. We're going to talk about that in a second too. But here's the thing, right? So quantitative easing is basically like these banks buy other products from other banks. So basically all of our eggs are in one basket, right? And then those banks buy a lot of government bonds to try to re-stimulate the economy. Now, when the interest rates are very, very low, when the economy is stagnating, and when there's a huge inflation, right, that's when the interest rates are very low usually until it's addressed by the Federal Reserve. They buy these government bonds. Now, the problem is with government bonds, what happens is if rates go up, if interest rates go up, and you've seen that the Fed has raised those commensurately several times in the past year, if rates go up, those bonds, because of the way government bonds work, because their value has to remain static, if the rates go up, the bond value drops. Now, when the bond value drops, what that does to banks who are heavily invested in these bonds, they lose billions and billions and billions of dollars in those investments overnight. The moment a rate increase happens, boom, all of those bonds drop and all of their liquidity drops, all of their company balance sheets just like basically are annihilated overnight. So here we have a situation where we told these banks to do this as a consequence of the last crash, and now we have a body who their primary attack against inflation, against a stagnated economy, is to raise interest rates. So we literally told these banks to lose this money on purpose. I mean, I can't figure out, I hope maybe there's somebody out there in my show, in my viewers, that understand this a little bit better, that maybe understands macroeconomics a little bit better, and can explain to me why we would do this. Because it seems to me like this is a foregone conclusion. It seems to me like quantitative easing plus the Federal Reserve raising rates as a consequence to the very item that would cause someone to try to use quantitative easing equals banking collapse, right? So we have to have been thinking about doing this on purpose. In my mind, I think that this is a setup. So I don't know. Maybe somebody else can explain this better to me. Maybe I'm not understanding this quite as well. I mean, even Elizabeth Warren, who, let me start off by preface this by saying this is a woman who I disagree with almost 100% of the time, but even she got this right. She's sitting there asking these. She was seen in an interview the other day saying, well, when you raise interest rates, you're going to have higher unemployment, right? And they're like, yeah, well, it's an unintended consequence. She's like, yeah, no, but it happens. It happens every time you do it. So can you really call an unintended consequence if it's a known consequence that you put into play? I don't know the answer to that question either. That's kind of like a philosophical question, right? Like if you roll a ball down the hill and the consequence is that the ball hits the bottom of the hill, right? Like you didn't necessarily target the bottom of the hill, but you know that that's where the ball's going to go. If you start the ball rolling, did you do it? It's a great question. It's a question that people talk on theologically too. We may touch on that question again later in this channel. But for right now, she's like, all right, well, how many times has this happened in the last century? And they're like, well, 12 times in the last century have the Feds raised rates, and it has contributed to in a direct effect of higher unemployment by at least 1% within a year. So unemployment jumps by 1% in a year. And out of those 12 times, how many times have we hit a recession or a mass depression as a result? The answer is 12, right? So basically, it's a virtual guarantee. So we're going to raise rates, the banks are going to collapse, people are going to be unemployed, and there will be a recession. Voila. We have successfully collapsed the system, to my mind, on purpose. Now, you may ask yourself why we would do that. Here's my theory, and this is where the conspiracy theory, comes in, right? I believe that we are doing it so that when the banks collapse, so that when we are destitute, so that when we're begging for a way to get cash and we have none, the nation can force its universal digital currency down our throats. Now, we've already talked briefly, we discussed in my bail-in video about how banks, when they're collapsing, they don't need to ask for your permission. They can take consumer funds and bail themselves out. They can take your money and bail themselves out. Even if they don't, they're going to try to basically, even if they don't do that, they're going to try to bail themselves out some way. And when they do this, they're going to take money from somewhere. Even if it comes from FDIC, it may come from FDIC. But here's the thing. Out of the money in the universe, floating around in the American currency activity, right? Like out of all the money that's floating around in zeros and ones everywhere, you're looking at like $9 trillion. FDIC only has I think 20 billion. So literally 2% of that money is actually protected, right? And who do you think is going to get it first? Let me ask you this. Who do you think is going to get their money out first? The people that are financially savvy, the people that have teams of financial counselors, the people who are rich, they're the ones who are going to be informed. They're the ones who are going to get their money out and get it protected. The rest of us are going to be screwed. We're going to show up to the bank one day and they're going to be like, oh, I'm sorry, you don't have any money here. We encourage you not to use cash is what they're going to tell you. So here we are, banking system's collapsing. People are going to be unemployed. We're not going to have a way to get cash. We're all going to be begging for an answer. And the government's going to swoop in and save the day with a digital currency. A universal digital currency that will never fail, like the bank collapse we just saw. A universal currency that will always be good for any purchase, for any transaction. A universal currency that is so convenient, all you have to do is think about it to change where that money is from moment to moment. A universal currency that the government can track every second of every day, They will be able to tell when you have made every single purchase. Never again will you get a purchase to go through without taxes. Never again will you have an under the table. Never again will you be able to pay the lawnmower kid from across the street to mow your lawn $20. Never again will that happen. Never again will you be able to go to a yard sale and pick up, a used power drill. Never again without the government knowing. Now, the government's going to know everything you do. They're going to know it. Not only will they know everything you do, they're going to tax every transaction you make. They're probably going to add a transaction fee because they'll have a monopoly on the money. This is why the government hates cryptocurrencies. This is why the government doesn't like cash, because they can't track it. That's why repeatedly over the last century, they have added, anti-money laundering acts and da-da-da-da-da. They keep on trying to add additional policy. The Patriot Act itself had some financial policies under it that basically allowed them to track money. They're trying to keep everyone from having any kind of transaction that is not tracked by the government, that they can't put their claws in and pull some of that money. It's got nothing to do with saving you against terrorists. It's got nothing to do with saving you against evil criminals that want to launder money. It's got to do with them knowing exactly what you're buying every second, and with them being able to tax every single transaction. That's what it's got to do with. And once you're dependent on that system, you'll have no other system to go to. That's what I got for you. I'm kind of interested to hear what you guys have to say about this. And please, if anybody has greater macroeconomic study than I do, because I admit that mine is definitely lacking. I'm reading all of this, as fast as I can. I'm reading. One of the guys who I really like online is Mark Moss. He's very, very talented, very, very skilled economist. But as fast as I'm trying to catch up to all of this, if somebody out there already knows why we have put this seemingly foregone conclusion into play, I would love to hear an alternative theory. But anyway, I'll catch y'all next time on Couch Talk.